Nvidia reports earnings this week, and one sentence in that report is going to matter way more than even their actual earnings results. Most investors won't even notice it, but that one sentence will determine if the stock is going to rally or if it's going to pull back. And this could be even if there are really great results, because these earnings are not just about Nvidia. These results will impact all of AI. So let me take you through in the next few minutes some things that you really need to actually look out for in these earnings. So that way you can go ahead and interpret them without guessing. So let's start off first with the trap that most new investors fall into when it comes to earnings like this. So as of this filming, Nvidia is trading right around $190 per share. The options market is pricing in a 7 to 10% move. That means after earnings, the stock could swing $13 to $19. So this isn't just an earnings event, this is a volatility event. Now here's where things get dangerous. Nvidia is valued around $4.7 trillion. They are expected to grow right around 70% year over year. And a company of Nvidia's size growing this quickly is extraordinary. But they need to not only grow, they need to accelerate. And that's what makes this quarter different. It's not about is Nvidia growing. It's about is Nvidia accelerating. And only one part of this entire report is really going to expose that. There are four numbers that really matter in this report, but number three I'm going to list is going to be the one that dominates everything else. The first one is data center revenue. This is the real engine for Nvidia. All of that spending coming in from Microsoft, Google, Amazon, this is where it all comes out to play. And if they release numbers that are showing meaningful acceleration in their data center growth, the stock is going to pick up and momentum will likely continue. But if they meet expectations or if it shows any kind of slowing, it's going to be a really big disappointment because this is the core thing that Nvidia is building their dominance on. And again, this is not about what they've done in the past. It's about what they're going to be doing in the future. They need to accelerate into this quarter. The next big measure is margins. And Nvidia's margins were right around 70% in the last quarter, which is just absolutely ridiculous for any kind of company to be pulling off within this space. So it's really key that these margins stay intact or actually improve. If margins hold or they improve, this shows that the supply and demand equation continues to be in Nvidia's side. People need these chips, and Nvidia has lots of pricing power because of this. If their margins start to slip somewhere into the lower 60s, this will start highlighting that supply and demand is starting to even out a little bit and could mean slowing in the future. This at scale means a lot less profit for Nvidia, and this could then damage the stock from there. Third is really the trigger that's going to move the stock, and that is forward guidance. Wall Street doesn't care about what you did last quarter. They want to know what you're going to do in the future. And when you have a hyper growth company like Nvidia, it's really good to cement what you've done in the past, but we want you to continue building on that. And again, the theme is acceleration. Right now, Wall Street expects Nvidia to be somewhere in the middle 60 billions for the next quarter. If Nvidia is able to guide at that or above and show meaningful acceleration, the stock will really pick up. But if they have awesome earnings and their forward guidance doesn't really impress, this will create a lot of volatility in the stock. And this is why this thing is so key. And it's the key sentence that I mentioned before that will set up the tone for the stock moving forward. We want to see acceleration. And if there's no acceleration, people are already a little bit leery of the AI trade. And this will help highlight that and start affecting companies, not just Nvidia, but across AI. And then number four is management tone. And this is really important and can be often overlooked when it comes to earnings reports. Jensen Huang, the CEO of Nvidia, is generally very good at telling an amazing story. So it's easy to get caught up in that sometimes, but really pay attention to what management is talking about. Are they talking about supply and demand evening out? Are they talking about what all of these hyperscalers like Meta and Google have been saying that they just cannot get enough chips and demand is going to continue into the future. These things will really be the icing on the cake, and be sure to check in to the Q&A section because they always have some really good questions that highlight management tone well. So let's zoom out here and remind you that the options market is pricing in a 7 to 10% move. And that's right around the range that Nvidia usually does when they report on earnings. So this isn't really about a move of up or down. The real question is the surprise big enough to go outside this 7 to 10% range? If it's on the high end and above 10%, that really tells you something, and I would expect the stock in the near term to do extremely well. And it's on the other side of the fence. If it's below 7% and right around expectations, that also tells you something that if it's below 7%, that means that everything was kind of as it should be and probably not the best for something like an Nvidia that's such a hyper aggressive momentum stock. Let's walk through what's realistically on the table for these earnings. And one of these scenarios I'm going to talk about is much more likely on the table than some of the others. Scenario one is they crush. The revenue goes up, everything accelerates, the stock continues to pick up, and you will then see this bleeding into other really important names when it comes to AI. So think AMD, TSM, all of these ones that are heavily involved and webbed together, these will pick up, their stocks will continue to accelerate, and everyone will be happy because the AI trade will continue. Scenario two is where Nvidia is strong, but they're seeing demand stabilize. You could see revenue up, you could see a slight acceleration, and you could even see some guidance up along with margins holding. But this could likely result in a pullback of 5 to 10% because the high expectations were just not met. And this wouldn't mean that Nvidia is weak or that the results were necessarily bad. It just, when expectations are so high and they don't get met, investors don't like this. They like continuing to feel really good about everything that was in there. And this is the kind of result I think investors need to be emotionally prepared for, given all of the neutral to negative sentiment we've seen already leading up to this. That is AI spend really having a good ROI for companies? And then finally, scenario three is a clear slowdown across all of their measures. I don't really see this situation because we've already heard from all of the largest hyperscalers in their earnings reports talking about them increasing their spend. But if we do get hints that build out is slowing, demand and margins are coming down, and the guidance for next quarter comes in below, you're going to see a total reevaluation of Nvidia's stock, and you might see some compression when it comes to its price to earnings ratio because the story for AI is not as good as what everybody thought it was. And again, this is a scenario that could happen. I think it's a pretty unlikely one. So remember what I said at the beginning, that one sentence is going to frame up and position the stock moving forward. And that really is that forward guidance. That is what matters the most, and not so much as what the current quarter actually did. We want management to have an amazing tone where they are talking about acceleration across measures, margins continuing to hold and build. And this acceleration is going to be key. Not meeting expectations, not beating the current quarter, accelerating into the future. If acceleration continues and the long-term thesis of why Nvidia is an amazing company stays intact, expect really good results coming out of earnings. If the flip side happens where that long-term thesis gets challenged because we're not seeing notable acceleration, expect a pullback in the stock and just a reevaluation across AI, and get ready for this to impact multiple companies across the board. After earnings, I'll break down exactly what changed so that you have a really good takeaway on what to do with the stock moving forward. And if you want to make sure you don't miss it, be sure to subscribe. These earnings could very well define what the next phase of the AI cycle looks like. Thanks for watching, and we'll see you in the next video.